Alright, yes guys, welcome back to another YouTube video, and we are doing the classic silver bullet breakdown. However, in this video I'm going to be breaking down a trade I've taken this week. Absolute banger. People are telling me the price action is awful. What are you talking about? Last week I secured 93 handles in profit. Yes, I occurred a losing trade, of course. Very transparent at both my wins and losses. Monday we secured a absolute banger for 93 handles on a long position. Tuesday I lost 30 points on a short. Wednesday I missed the trade but ended up taking a short inside of the lunch macro for a 30 handle gain. We're going to go over both Monday and the trade I missed on Wednesday, which frustrated me a little bit. However, I always keep my psychology intact. Even if I miss a trade, lose a trade, it's the same result. As long as the thought process behind the trade is correct, that's the only thing that you should be worrying about. Regardless of the result of the trade, win or loss, as long as the thought process is correct, then repeat the same process and you're going to be profitable. Taking a look at the current screen, macro timings. You must ensure that every single trade and your entry is always inside one of these three macros. I don't advise you trade the London session or Asia. I don't know many people, or I don't know anyone actually who's profitable from trading London or Asia. Of course, London offers a few banger trades here and there. However, as we near the summer months, majority of cases is that the London session is going to be low volatility, therefore difficult to actually secure a clean opportunity. So that's first thing, entries inside of macro. Second of all, power 3, as you guys are probably already aware, is that the power 3 paired with the unicorn model is a very high probability model if applied correctly. So the power 3 consists of accumulation, manipulation and distribution. I've drawn out a clean example of power 3 paired with a Judas swing. Paired with the unicorn model, it would be an absolute AA plus setup. However, as you guys already know, these type of setups rarely come across the table. This is why I've deterred the difference between a B plus and an A plus setup, because majority of cases you'll be taking trades such as B plus, which you can take with half size, and then when an A plus does come along, obviously it doesn't have to be as clean as this, but A plus consists of a fair value gap following your bias, super liquidity, not going against the 5 and 15 minute draw, which we're going to get into later in this video, valid stop placement, entry inside of macro, SMT is only a confluence, and a few other key notes as well. So accumulation phase tends to happen prior to the New York Open, where price would go sideways in anticipation for the New York Open. At the New York Open, if you ever go straight towards a point of buy side or straight towards a point of sell side, if that point of sell side matches with your bias, therefore sweeping London lows, and you have a bullish bias already, then from that point you need to have alarm bells ringing that is a possible Judas swing. It would only be a Judas swing if it returns back after taking buy side or sell side to the New York Open price. Let's say for example you have an accumulation phase and then manipulation, which is going to be the Judas swing, and then price has the distribution phase, which tends to be around 15-20 minutes after the New York Open, which is going to be inside of macro for the distribution phase. And the distribution phase is when we capitalize and make money off a possible setup such as the unicorn model that we trade. So without wasting any time, now you guys get more of an understanding of power 3, Judas swing, and the times of entry for each trade. Now let's get into a trade I took this week on Monday. So each day determining your bias is the first thing that you should do each day, is determine your bias. Starting on the daily time frame, you have to understand where is the next daily candle likely to draw to. In some cases you're not going to have a clue, and some cases you will. On this day we're currently inside a daily bullish gap. I don't care that we've swept sell side, I don't care that we've swept internal range low. We only look at the most recent current imbalance that we are inside of, which is the daily bullish gap. Therefore the daily bias is bullish. Simple as that. Too many people, they start overcomplicating bias by looking at order blocks, mitigation blocks, breaker blocks, sweeps of liquidity, previous day low. Before you know it, you're sat in a pile of sweat and you don't even know what bias you actually have on that day. That's why I've simplified it to the fact of only the most recent current imbalance. If you're not inside an imbalance, you do not have a bias. There is going to be cases when price trades out of a bullish imbalance and then we have unfilled imbalances above, therefore indicating that price is likely to draw higher out of this bullish imbalance to meet the draw of the unfilled 4-hour bearish imbalance. In this case, we would then run a 4-hour bullish bias. So we have a daily bullish bias, a 4-hour bullish bias. Now let's take a look at the hourly. So by looking at the hourly, I know it's not that clear, but if we put this on both NQ and ES. ES is a little bit clearer to identify here, but you'll see that we have this hourly bullish gap, which has been what? Well, it's been inversed. So it's been inversed on NQ, and it's also very clearly been inversed on ES. Therefore, when a fair value gap gets inversed, the draw is going to be the opposing low. If we're inside a gap like these previous candles before the inverse, we're going to expect the draw to be the next high. Price proved thus otherwise to then be inversed, therefore we're expecting the draw to be the low. Therefore, on the hourly time frame, we're going to run an hourly bearish bias. So we have the daily as bullish, the 4 hour as bullish, the hourly as bearish. So already intraday, we're starting to lean towards more of a bearish bias. Now, by looking at the 15-minute time frame, what imbalance are we currently in? Well, we've taken the high and we've also inside a 15-minute bearish fair value gap. The 15-minute bullish gap actually got inversed slightly and then after took the high and tapped a 15-minute bearish gap. So intraday, over the next hour to 4 hours, we're expecting more bearish price action as of now. Also on the 15-minute, you want to mark out the key levels, such as London highs, Asia data highs, previous day high, previous day low, previous week high, new day opening gaps, etc., as you guys already know. So now let's mark out the key levels. So as you guys can see here, we have a set of London lows that you're going to want to mark out. And then a lot of people seem to misidentify 15-minute highs and lows and start marking out random levels. The reason why I mark out minor buy side or minor sell side in some cases is because below that level or above that point of minor buy side, we actually have a higher time frame imbalance, which confirms our bias from sweeping that liquidity. So if we sweep minor buy side, let's say such as this high, we label it as minor buy side. If we have, say, a 1 hour bearish gap which supports our overall bias of bearish, then I would look for that to be swept and potentially look for shorts from that area. But we don't look for this high to be swept and then look for shorts without it tapping into an imbalance or supporting a higher time frame draw. As you guys know already, we have more of a neutral but bullish bias as of now. Therefore, we're just going to mark out the key levels and see areas of interest. So there's 3 more areas of interest, which is going to be this high and this low, which is going to be previous session high, previous session low. I'm showing you guys Monday 2nd of June of this week, and this is going to be previous session on Friday's low, previous session of Friday's high, and then we also have London lows here. So let's label each level. Wherever you mark out an NQ, make sure you mark that out on ES as well. It's very important that you monitor both pairs. And as some of you guys have probably noticed, that we have a new week opening gap at this level. It's not huge, however, it is still an existing new week opening gap, which is an unfilled area, which is going to be a draw for price at the New York Open. Considering we have a overall bullish bias here at the New York Open, a new week opening gap to be the overall draw. Let's fast forward price here until we get to the first day of macro and let's see what we get. Okay, as you can see at the New York Open, we have an unfilled New York opening gap. So the first presented fair value gap inside of the New York session is going to be this one, which was created at 9:30 a.m. Price immediately went towards the new week opening gap and also previous session high, and we also have a set of London lows and also previous session low, if you guys are wondering what PSH stands for, previous session high. So the New York opening gap is going to be an overall draw for this New York session. So during the AM session, I'm going to be looking for potential opportunity to target this area or trade out of it, considering it's an unfilled New York opening gap. So let's fast forward price. Okay, so now we've taken previous session high. What do you guys notice about NQ and ES at previous session high? What is the difference? So as you've noticed, there's a bearish SMT on ES. ES is now named as the weaker pair between the two because it has not made it to previous session high. Yes, we've had a sweep of liquidity. Now we need to reevaluate our bias because we've set previous session high. A lot of draws on our bias have now been met because our bias was bullish. Now our bias has been met. We need to now reevaluate our bias. So daily time frame is still bullish. 4 hour time frame is now bearish because we're in a 4 hour bearish gap. Hourly time frame is now 50-50. We're not in an hourly bearish or bullish gap, but we have swept buy side. 15-minute is also 50-50, and then the 5-minute is also going to be 50-50 as well. So with our overall bias being neutral because we have the daily as bullish and the 4 hour as bearish, we've swept previous session high. Overall, we're going to be looking for a potential opportunity for shorts to target the New York opening gap and the New York open price, which is at 21,287.50. So on this specific day at 10 a.m, we actually had red folder news, and I waited personally for red folder news. That's why I caught the trade after. But on Monday of this week, it would actually be generally impossible for you not to make money. You wait until the macro. Let's fast forward price. Okay, so going into the first day of macro, you guys can see we've swept previous session high. We're now seeing a shift in market structure, which is perfect. Now we need to see a fair value gap. We also have a mitigation block, so let's see whether we get a fair value gap paired with that also. And yes, a market structure shift is only valid if the body of the candle closes below the short-term low, not just the wick. Okay, perfect. Now you have a fair value gap, and you can now look for an entry with a valid stop placement to then target the New York opening gap. A lot of people took this trade and secured easy gains. It's not the trade that I look to take. We had news at 10 AM, which was just around the corner in around 12 minutes time. Therefore, I actually waited for 10 AM news, and I'm going to show you guys the trade I took. But this trade, if you did take it, was 100% valid. As I said, there was 2 trades to take on this day, running a max stop placement of 30 handles and then targeting the New York opening gap for a 2.1 to 1 risk to reward. That's all you need to make money, guys. Don't be looking for a 5 to 1 or a 6 to 1, a 7 to 1 risk to reward. All you need is a 2 to 1. That first 1 minute low that gives you a 2 to 1, risking 25 points. That's all you need. 50 handles, you're out, you're done for the day. You have one winning trade, that's it. You close your laptop and you're off. You have a losing trade, then you have one more opportunity to look at the next macro for an A+ setup. If your drawdown's affected below 75% of original drawdown on your funded account, then take that next trade with half size if it does present itself. There you go. So the next candle you can see has wicked up into that fair value gap where people were catching entry for price. And now, as you can see, we've taken that previous short-term low after catching entry for the trade. So you're going to take this trade to break even. It's going to be risk-free, or you can move stops trailing to that first short-term high. And there you have it. That'll be a quick 2 to 1 banger for that trade. 63 handle profit for those that took that trade. Second trade example. What did I take? Okay, so I marked out that we had a pair of equal lows, which you guys can see at this point. So on NQ, we have a set of equal lows. We also have a set of London lows, and we also have the New York open price. So now let's fast forward price. Let's wait for the news at 10 AM. 10 AM news is either going to be, I would write this down, manipulation or distribution. Manipulation being that it takes sell side, buy side, equal lows, etc. That would be manipulation. Then from that point, after the 10 AM news, you would then look for a displacement or market structure shift higher for price. Or manipulation has already occurred. We've swept equal lows in this case at 10 AM, and then the 10 AM news causes that displacement higher, which you can use that to create a fair value gap, an entry, and then target the opposing liquidity. So let's see the scenario of 10 AM here. Okay, so 10 AM news in this case was manipulation. We've swept equal lows. Now the news is out of the way. Let's see if we get an opportunity for longs, trading into that daily bullish gap as well. Okay, so I'm going to look for a market structure shift above this previous short-term high, and also it's very important that you make sure it's correlated between NQ and ES. Okay, perfect. Now we've seen a shift in market structure above that previous short-term high, leaving behind a mitigation block paired with a fair value gap on both NQ and ES. We're going to look for the first 1 minute high to target for a 2 to 1. We're going to look for an entry off this fair value gap here, so let's just mark it out quickly. Okay, so stop placement in this case, I actually ran a max stop placement of 30.25 handles, which is my max stop. The first high, this high doesn't give a 2 to 1, it gives a 1.5 risk to reward, so it's too little. We need at least a 2 to 1. So the first high is going to be this high, which gives us a 3 to 1 risk to reward. That's the level that I look to target, and I ran my TP just below the point of buy side. Some of you guys ask, why do I run my TP just below that point of buy side? The reason for that being, in case we create equal highs, I'm still going to get filled on my TP and not be left with price coming back to my trailing stops. So let's see if we catch an entry. Perfect. So the next 2 candles gave us an entry. I took this trade. So to determine whether this is an A+ setup, of course we've displaced on both pairs. Are we trading into a 5-minute gap going against the trade? No, we're not in a 5-minute bearish gap going against our long position, and we're also not in a 15-minute bearish gap going against this trade. In fact, we're in a 15-minute bullish gap, which is actually going with our trade. Therefore, I took this trade with full position size, which was 12 contracts on my live account, running a 30 handle stop and a TP just below that point of buy side, which in majority of cases, I run it around 3 handles below the objective that I'm looking to target. So let's fast forward price. Okay, so as you can see here, price has now taken that previous short-term high. In this case, I trailed my stops because that short-term high is still very close to break even. I trailed it to the body's candle low of this candle, halving risk from 30 handles to 16. So let's fast forward price. Okay, so when we took that second short-term high here, as it's a lot further away from break even, I then moved my stops all the way to break even. Therefore, at this point, it's now a risk-free trade. And then as you guys can see here, we created a fair value gap. If price trades back into it, I'm going to expect every bearish PD ray to get respected until we meet the final objective. Therefore, I moved my stops to this red candle's wick low, as I expect if price does trade into this bullish gap for it to be respected and continue a market maker buy model. So let's fast forward price. And there you have it. TP was smashed, and this week I'm up over $20,000. And for people that are complaining that the price action's bad, I don't really know what you're talking about. For those of you with questions and you want them answered, the best thing to do is to comment on this video what you want to see inside of the next YouTube video. I take it into account, take notes, and make sure it's inside of the next video for you guys. If you took the same trade, then comment below. All right, so now we're going to get into the trade I took on Wednesday and the trade that I missed. Yes, I was frustrated that I missed the trade, and it's down to my own error, no one else's. And I'm going to explain to you guys why I missed the trade. And let's get into the New York Open. Okay, so the trade that I took on Wednesday, let's get straight into it. And let's determine our bias as we would. So on the daily time frame, you can clearly see that price inversed that daily bearish gap. Therefore, the draw is going to be higher towards the next daily bearish gap. Trading out of a daily bullish gap, the draw is automatically going to be the next high anyway. So we're expecting the draw to be previous week high. So let's mark that out already as the overall daily draw to be previous week high. Okay, so daily bias is bullish. Now let's look at the 4 hour. So on the 4 hour time frame as of now, you guys can clearly see that we have an unfilled 4 hour bullish gap resting below, and we're currently in a 4 hour bearish gap. Therefore, we're going to run a bearish bias on the 4 hour. Therefore, we have a daily as bullish, 4 hour as bearish, and that means we're going to result as neutral, which is 50-50. We don't know where price is going to go. Okay, so now by looking at the hourly time frame, you can see we're in an hourly bullish gap. We're going to run a bullish bias towards the next previous high on the hourly, and same goes for ES as well, because we inversed this gap and then took the low. Therefore, the objective of the inverse has been met, and then we've tapped into these bullish gaps here. The 15-minute bias as of now, we're going to run as bearish because we're in a 15-minute bearish gap. And then the 5-minute is also going to be bearish as well. So on the 15-minute, let's mark out the key levels of both London, Asia, etc. Okay, so as you guys can see, we've already swept Asia and London lows. So I can delete this off as we know it's already been swept. We are currently in the mix of accumulation, as we mentioned at the start of this video, which you can see where price is in between a range of buy side and sell side liquidity. Okay, so with our overall bias being neutral, we want to let price unfold and give us more of an overall bias, and the only way to do that, fast forward price, let it either take buy side or sell side, and then reevaluate price once that happens. Okay, perfect. So now we've taken this point of buy side on both NQ and ES. From this point, you can then potentially look for a opportunity for shorts as we're inside that 4 hour bearish gap and respecting other bearish PD rays. On this day, similar to Monday, we had a set of red folder news at 10 AM, which I further waited on Wednesday for it to come out. Okay, so let's fast forward price going into this first day of macro on Wednesday. I waited for news at 10 AM to come out, therefore didn't take anything before. On Wednesday, a lot of people took an entry short, which is 100% valid. We have a sweep of short-term high, a bearish breaker paired with the fair value gap, a shift in market structure on both NQ and ES. I waited personally for 10 AM news. However, this trade to enter short, target discount of this move higher, say this low, is 100% valid. Second opportunity was this one. We have a fair value gap. Also, if you missed the entry of this one, inside macro, we also had a second entry. I was still waiting for 10 AM news. Okay, boom. The news came out at 10 AM, caused a further displacement lower below this previous short-term low, created a bearish SMT on the lower time frame from this high to this previous short-term high. Therefore, we have an SMT displacement. Let's see if we get a fair value gap. Okay, perfect. So now price has created a fair value gap from the displacement at 10 AM. So similar to Monday when I said it's manipulation, in this case, we've seen a displacement lower. Price has now created this fair value gap, which we can now look for an entry from off this gap. Okay, so the next candle comes out. ES taps the fair value gap. I was very zoomed in, so I was very much looking to see, does NQ tap it? I was looking at the left side of my screen where NQ rests, and my other screen on the left, which has my executional tab of all of my prop firm accounts and my live account to actually enter short from, as I was very occupied and looking at it, and I did not see that ES tapped the gap until 30 seconds after. 30 seconds after, price was already down around 20 points on NQ since my point of entry, which I was looking for, and I I missed the trade. That is how I missed the trade, guys. It's disappointing, but it is what it is. So the overall trade, I was meant to get an entry, and the entry would have been probably a bit of slippage around here. Once ES taps the gap, I would enter automatically on NQ, running a stop at the previous candle's high, and then targeting data lows. Because this is 10 AM, this is data lows, and that's the point that I would look to target. Very good risk to reward, getting over a 3-to-1 risk to reward and aiming for 50 handles. And boom, TP got smashed in just under 3 minutes, which was a crazy trade. So you guys are probably wondering, how did I make money on this day and which trade did I take? Well, let's fast forward price into the lunch macro, and this was the trade that I took. Okay, so the trade that I took was this one. We had a clean shift in market structure with a bearish breaker paired with this Faveli gap inside of the lunch macro with the hourly bias to be bearish, more intraday bearish here, and I took a short off this bearish gap. Wasn't as clean as the first day of macro, however, still a clean 2-to-1 risk to reward. Targeted this low, risked around 12 handles on this trade, running at the body's candle high for a 2.1 risk to reward for a 30 handle gain. I closed last week for a 93 handle profit, 2 winning trades and 1 losing trade. I did not take any trades on Thursday because I don't trade Thursdays on NFP week, extremely low probability. And then I monitored price on Friday once all of the news came out at 8:30 for NFP, and I think the price action was absolutely disgusting, so I didn't take any trades. That was the overall rundown for last week, guys. If you enjoyed this video, make sure to run the likes up past over 1,000 likes at a bare minimum for this video. Guys, we're on road to 100,000 subscribers. Subscribe to this channel and let's keep this channel growing. And until the next video, have a great rest of your weekend, guys, and we'll speak shortly.